Yeah, hi friends. It's good to be back. Over the last 3-4 weeks, we have had a very quiet range. In fact, across the board, there has not been much of move in the forex market. Dollar rupee has been whipsawing between the 55 and 56 range. Everybody is trying to figure out when the trend is going to start, be it up or down. Let us outline a couple of factors which we believe can set the next trend, whether upward or downward. Let's first talk about what can help the dollar. Now, the hope is that the central banks, especially the European Central Bank and the US Federal Reserve, these two central banks would get together and unleash a monetary easing measure, which would help the European countries like Italy and Spain, who are facing high interest rates, to alleviate that problem, and as well as it will also help shore up the liquidity in the financial markets. Now, if that were to happen, dollar would surely depreciate and Indian rupee would benefit from that. In that case, we could see a left side move in the dollar rupee, whereby Indian rupee could move as much as towards the level of 54 or even 53.60. But that if they unleash the monetary easing. But on the other hand, as we have seen over the last 1 year or so, and especially the last few months, that the economic data across the Eurozone is becoming bad to us. Even economies all over the world is now facing the heat. Even the US economy is not prone to a Eurozone global economic slowdown. So the economic data in America also has shown a downward trend. Asia, emerging markets, China, everywhere the economic trend is downward. So that's a fact. Now that's, as we said, is being countered by the hope of central bank easing. So if the central banks don't ease, if ECB only goes and cuts rate, which we believe is completely cosmetic, because interest rate is an ineffective tool in Eurozone at this point, because already interest rates on absolute terms are quite low. It's below 1%. So tinkering 25 bips or 50 bips here and there, it's not going to change things much. And secondly, they need to come out with a plan to support the bond market of Italy and Spain, because it is becoming quite clear that Spain could be the next domino to fall, and Spanish bond market is significantly large. It's not like Greece, Portugal or Ireland, which can be supported. And once Spain falls, it could drag Italy down with it, which is even much bigger. So there has to be a credible plan how to backstop that. So if that is not coming, then the global economic slowdown, concerns on the Italy and Spain could be enough to push the dollar higher towards the level of 57 or even towards 57.5. Technically speaking, 54.80, if that is breached and we see dollar trading down, then look to short for a trend towards, say, 53.60. If we see 56.20 breached and dollar is sustaining above that, and there is no monetary easing from either Fed or the ECB, which should be clear over the next 15 days, then we could see an upward move in the dollar, then look to buy. And in between that, keep playing this range. Closer to 55, buy the dollar. Closer to 56, exit the long positions and maybe take a contrarian trade, buy some out of money put options. So that could be the range play. Thank you.